Welcome back to the show. Check out these headlines we have for you today. Ethereum secret disclosed. You're going to want it. We got David Schwartz and Ripple's secret weapon and tokenization will start. He's going to tell you when. We got that and so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on Twitter and YouTube for exclusive content. Right now, it's $1.09 trillion market cap for crypto. The market is up 0.3%. Good morning, everyone. 26,800 plus for Bitcoin, 1,500 plus and change for Ethereum this morning. Tether market cap is now up to 83.5 billion plus. We're watching it close. XRP is at 48 cents. There's no movement on the 24-hour, but we are off by 6.3 on the 7-day. Let's get into this, ladies and gentlemen. It is linked to, ladies and gentlemen. You can get some of the best private equity in the world right here. Access to private investment. All you got to do is sign up and get started here. It is an amazing opportunity. Don't forget, Link2 has said they're going to be going public in the near term. We're still waiting on a proper announcement from Ripple, but we got to get that case out of the way, I would imagine. But there's just remarkable opportunities on this platform, so make sure you check them out. Click the link to the sponsor below and check out the best private equity with the best minimums. Oh boy, this right here. I want you to take a look at this. This is evidence that better be used in the Sam Bankman-Fried FTX case. He says there's a functional religion around the CFO, Chief Financial Officer, said Sam. I'll ask them, why do I need one? Some people cannot articulate a single thing the CFO is supposed to do. They'll say, keep track of the money or make projections. And I'm like, what the F do you think I do all day? You think I don't know how much money we have? Oh, well, John Deaton says, no doubt will be a part of the cross-examination of Sam Bankman-Fried, who actually tried to say in interviews that he had no idea what was going on with the money. Can't have it both ways, Mr. Sam Bankman-Fried. And neither can Joseph Lubin and JP Morgan, because the secret is disclosed, ladies and gentlemen. Now that JP Morgan owns a significant stake of this infrastructure, they basically own Ethereum. And we're going to show you exactly how that is. This right here is what you need to know. Consensus is a software development company that was founded by Joseph Lubin. Yeah. After co-founding Ethereum. The company is a major player in the crypto space and is valued at over 4.4 billion in Australian dollars. It is responsible for developing cryptocurrency related to infrastructure and is especially known for developing infrastructure critical for Ethereum's ecosystem, including MetaMask, which, by the way, has been said recently in the last several hours, has been taken off of the Apple Store. Now, I'm not on Apple, so somebody could help us confirm that, but I have seen multiple confirmations online. If you could help us with that, we'd appreciate it. It says here, the company's shareholder mostly consists of employees and now former employees, 35 former employees of the company who make up more than half of the shareholders want the deal that saw fundamental intellectual property, more specifically Infura and MetaMask, transferred from CAG to Consensus Software Incorporated, known as CSI, a new entity. The deal, popularly known as Project North Star within CAG, saw JP Morgan get a 10% stake in CSI in exchange for offsetting $39 million loan to Joseph Lubin, Ethereum billionaire and Consensus chief. According to the employees, the transfer of this intellectual property from CAG to CSI was done illegally as the shareholders were not informed about it. Well, here's why it matters outside of that fact. This lawsuit is about much more than the fact that CAG was cheated out of its intellectual property and subsidiaries. It brings to light many failures of the Ethereum blockchain in terms of decentralization. Listen to this, ladies and gentlemen. MetaMask and Infura are arguably the most critical infrastructure to the blockchain ecosystem. Infura, for one, is the node network that processes about 13 billion code requests every day. It provides developers with a way to connect with Ethereum without the need for running a full node. But listen, currently CSI is the single provider that operates Infura, which is dependent on Amazon's cloud servers. This makes Ethereum vulnerable to a single point of failure. Come on in. Now that JP Morgan owns a significant stake of this infrastructure, they basically own Ethereum. So now you know why we always say that Ethereum is centrally controlled by JP Morgan, and I certainly believe the country with the letter C is behind this as well. Remember, Vitalik Buterin went there for 2 years over to China, and he could have stayed here, but he went over there for 2 years. What kind of deals was he making over there? However, this could be counterproductive for Ethereum as it contradicts the whole philosophy behind the establishment of digital currencies and decentralization, which we all know is a buzzword and it is not a fact. And then there's this. Hugo Filion from Flare Networks tells us the tokenomics post put out to give information on the FIPO1 vote included the distribution of the tokens that are now being burned. With these tokens being burned, the community now has greater leverage into FIPO1. A revised tokenomics will be released. That's right. Flare is to burn 2.1 billion backer tokens in support of ecosystem health. I tell you, this crypto winter is revealing a lot of things that bring more questions than answers. Now, one of the things I speculate on is that Flare Networks, if you look at what Flare Finance was going to do on top of Flare Networks, it looked a lot like a securities offering in many settings. And I would imagine that Flare Networks and Hugo are not looking to bring any U.S. regulatory attention to themselves until they get a more clear understanding about exactly how they're perceived in a regulatory framework. But that's my speculation, my digital perspectives, not financial advice. And here is a great clip from Mr. Man. He says, you call it dumping because I don't think you understand business and the numerous ways of self-sustainability. Continue doing your homework and you'll get to your answers. And he's absolutely right. Listen to this older clip of David Schwartz.
Reddit could just sort of take it out of as a free pot. But what happened is the original founders, the original creators of XRP, the people who started up the XRP ledger, divided the XRP so that some of it was gifted to a company that eventually became Ripple, and some of it, approximately 20%, they kept. A significant fraction of that 20% has been donated to charity. A significant fraction of the 80% that was given to what's now OpenCoin is locked up on the ledger in escrow. Those escrows release roughly 1 billion XRP every month, which Ripple uses to build the ecosystem and to fund itself. And what happens at the end of each month is the unused XRP over that billion is put back into escrow, adding a new month. So originally there were 55 months of escrow. I think there are about 3 more months now. So that provides complete transparency on the token distribution. And every quarter we publish a sort of market summary explaining how we use the XRP that we use. So it's
much different than the way we just read Ethereum now, isn't it? This is why I say it's a great clip, and we got a few things coming here that you're going to see that I think fall in line with all of this, but this is really in contrast to the lack of clarity going on in Ethereum that we just revealed to you. The escrow is a secret weapon that Ripple stewards and uses responsibly to continue to build the ecosystem. And what a weapon it is in the best way in the form of business, and what it has given them, the ability to have pre-mined XRP that they can use to expand their operations, to incentivize others to participate, and to purchase and make acquisitions of other companies, which Brad Garlinghouse recently said they will continue to do. Then there's this, the ripple effect. I believe all of that leads to the ripple effect. Not financial advice says here, over the last few years, he started hearing the term ripple effect, and this is for fun right here, but I tell you, it leads into where we're going. Even though it's for fun, an association bias, right? You know, it's just like when you buy a new car that has a color you don't really see, and then the next thing you know, you start seeing that car and that color all over the town and the highway. So, but this is for fun. Take a listen to this.
And the conflict is having a ripple effect. Could have a ripple effect.
There's a huge ripple effect.
So the ripple effect.
Can you describe a little bit of the ripple effect?
What kind of just ripple effect?
Is there a broader ripple effect?
So what kind of ripple effects does that have?
In terms of ripple effects,
what's the ripple effect?
It has a ripple effect.
And the ripple effect of this one is just enormous.
That loss of services has a ripple effect.
A ripple effect, a ripple effect. You start hearing these things everywhere, right? And like I said, it's like an association bias. But then there is this understanding. I want to play this clip and set this up because I believe that ripple effect isn't going to just be a catchphrase that starts to stand out to us. There's going to be real action as a ripple effect. And in fact, I want to play you this clip very quickly here of David Schwartz talking about how soon he believes tokenization will start on the XRP ledger of traditional products. Take a listen here.
I'm hoping that we're going to see, as real-world asset tokenization projects grow, I think the XRP ledger is going to be a really good platform for them to launch on.
Real-world assets.
Particularly because of the low fees and because of the integration with the DEX, with the proximity to sort of the movement of funds. The ability, you know, if someone's going to buy, what do you want to do with a real-world tokenized asset? You want to buy it, you want to sell it, you want to hold it, you want to transfer it. And if you want to buy it and sell it, you want to be able to do that with whatever asset is convenient for you. You don't want to tie, if you tokenize some sort of debt, like you don't want to tie it to US dollars because then that limits access to it to people who have sort of proximity to US dollars. One of the things the XRP ledger is good for is giving you sort of proximity to many different assets, and that exchange is seamlessly built in.
That means, you know, oil to gold. That means diamond to dollars, right? That means yen to corn. Like, you know, anything to anything is what we're talking about through the decentralized ledger. Whatever it is you're looking to change hands to, the decentralized exchange can make a market for it.
So I think that's going to make, that's one of the many reasons why the XRP ledger is going to be a good place to launch tokenized real world assets. I think we'll see that in the next year, year and a half.
Cool. Yeah. And there's,
I'm hoping that we're going
next year, year and a half. Now, how about that? Real world assets like oil, gold, right? Soft commodities, hard commodities. This is getting exciting to me. Tokenizing real world assets like derivative stocks and bonds, right? All of this is coming. And if it's coming in the next year and a half, there's going to be some kind of massive explosion. And coming back very quickly here to Christian Carlo here, he said former CFTC chair speaks on the Internet of Value and that it's moving into digital dollars and CBDCs and that the U.S. should not seek leadership on the global standard table. He's also very vocal on the fact that the U.S. is not big enough to avoid a CBDC. And if you think about what David said about tokenization coming to the XRP ledger of real world assets in the next year, year and a half, well, then that means that the US dollar is going to have to be available in a digital form, albeit stable coins or regulated, CBDC, wholesale, retail, however it goes. You're not going to have tokenized real world assets and just paper dollars now, are we?
Development. We do, as Jen's probably explained, we do not advocate deployment yet of a digital dollar because we don't know exactly what we're talking about in terms of deployment. But we do advocate that the United States not cede leadership on the global standard setting table to our economic competitors or economic adversaries in terms of developing what potentially could be a digital operating system for a 21st century digital economy.
A digital operating system for a new economy, essentially here. Again, this comes back to a value in the protocol and not to seek leadership on the global standard table because you want to sit back and watch everybody else do what they're going to do and then pick the best innovation and value protocol so you can make the choice that will be lasting for generations and generations.
It's interoperable with other systems. You know, there are, as Jen may have mentioned, over 100 countries right now working on central bank digital currencies. Half of that number are in advanced stages. Europe has said they will begin to start test using a digital euro within the next several years. Britain has said they have a digital pound within a decade. So Americans are going to be facing CBDC whether we have a digital dollar or not. Let's just be clear about that. We're not big enough we can insulate ourselves from interaction with the central bank digital currencies that are coming about the rest of the world. And so how we prepare, if we are to deploy a digital dollar, to be interoperable with those other systems is important. And then finally, competition and innovation. How do we make sure the U.S. leads the Internet of Value in the same way we led the Internet of Innovation 30 years ago?
Wonderful, wonderful comment right there from Chris Giancarlo, Digital Dollar Project. Very quickly, let's take a look at this here and see what's going on with price on the XRP charts. Dark Defender tells us. Let's take a look at the XRP update on the weekly time frame. XRP continued the horizontal move this week, staying between 52 and 46 cents on Fibonacci levels. Therefore, the primary resistance is maintained and the uptrend continues, he says. Around 20 cents, we expected wave one towards 89 cents to $1.88. And we had it at 91 cents, and it finalized. It says here, we discussed the wave 2 to be around 46 and 39 cents in July, and now for wave 3, it is expected XRP will continue to triangle to target at $1.33. Moreover, the Fibonacci targets are the same, staying at 188 and 585 for wave 3. Every day, people think XRP fails, and every day he gets closer to success. I absolutely love it. Hashtag free DAI. Why is this guy suspended? He didn't do a thing wrong on this platform, which is exactly why it's prompted me and the malicious attacks I've been a victim of over the last several years being in the social media influencer business. And I can tell you what I've done is start a Patreon too, so we can keep our relationship together. No more will we be censored. No more will we fall victim to social media platforms keeping our communications disrupted. I tell you right now, for the cost of a cup of coffee, you can be in this group and we can make sure that we will always have the conversation and the connection and not allow to be held captive by social media and ridiculous things that are taking place. I mean, how is it that somebody could be just wiped off after creating hundreds and hundreds of thousands of people in a community for doing no wrong and still to this day not be reinstated? We cannot accept that as normal, and we have to take the steps together. And by the way, this is where I have to leave you, because for that cost a cup of coffee, you can come in here and join us. We're going to be discussing ideological subversion, the 4 stages of it, undermining American culture. You're going to want it. I'll catch all of you on the next one.